I want to get your thoughts on this. There's this thing called the Great Reset Initiative that I never know how to pronounce these. Klaus Schwab, I think is his name, the CEO of the World Economic Forum.
Yeah.
And he put out this thing after COVID, which is by 2030, he wants society to embrace this idea of not owning anything. So it's this, you will own nothing. That's like the campaign. And his whole idea is that we need a more efficient model where people shouldn't own things, they should be sharing things, taking advantage of the subscription service and the sharing economy in order to make the economy more efficient. Now, obviously you have a lot of naysayers there, which is telling people that, you know, this is completely against getting people to actual wealth, ownership, freedom, control, all of these things. I want to just get your take on that. When you hear something like that from the World Economic Forum founder and CEO, like, what's your initial take, just having been on both sides?
Yeah, I mean, first take is, who owns it then? Because the typical answer is then those on high own everything. They're like, oh, you poor little peasants down there that can't figure anything out and, you know, need to run around, and let us employ you and do charity and even universal basic income. I have a lot of problem with these ideas because what they're telling you is that you are not capable, they are capable, so let them handle it for you. And anytime you've been to the DMV, you know how capable the government is. They're fucking not. And by and large, they're incredibly necessary, and we are very lucky to have all of the institutions in place we have in our democracy. It's a core part of democracy is trusted institutions and institutions that function. But they are supposed to be limited in their scope. And so, you know, I disagree very strongly with those who think that we should let them control more and not let the private sector control more. I think that's highly problematic. Simultaneously, it's just the tragedy of the commons, you know, which is essentially proven economic theory that goes to show that you could use real estate as an example. You have a higher depreciation rate in the value of real estate, like actual value of real estate, not taxable depreciation rate. So just how quickly the property devalues and degrades in government subsidized housing than you do in same price point, and even some cases in slightly lower price point, same build, same time frame real estate that is individually owned. Why is that? They call it the tragedy of the commons. When we all own something, what actually happens is we own nothing because we do not feel like we have skin in the game and ownership. It goes back to Nassim Taleb's famous book that talks about skin in the game, this idea that if you want to understand incentive, look at who owns some portion of the outcome. And it's, I think, also why politicians are problematic by and large, because they do not have good incentive alignment structure, right? They get more power when they spend more money in the government, because then you increase the budget of the sector that you're running, of the segment or group or committee that you're running. And so could you imagine that in business? It's like, the guys who spend the most money on my team, regardless of whether they make more money for me or not, they're actually the most powerful just because they use up their entire budget, not because they get more for the average American, or in this case, the company. It's very perverse. And so I think anytime you want change, you've got to look at the incentives.
Yeah, it sounds like the VC model, which is like spend to burn. And we saw how that turned out when the market tanked, right?
Right.
Just like ours, yeah.
Yeah, and that at least has incentive alignment, because theoretically, if I give you $1, I want some return on my dollar, or I know because of portfolio theory that at least 10% are going to have, 100x of the returns of the rest. And so I know that there's going to be a 90% failure rate, but I'm okay with the 10%. That could theoretically work in venture capital, except when we flood it with too much money and we stop paying attention to, normal economics.
Yeah.
Which I think is exactly what we saw, and why you've seen a decrease in IPOs, you've seen a decrease in unicorns, because they never were there in the first place.
So you mentioned the kind of the differentiations, like the differences between the generations. So what I saw was that when it comes to like talking about money, transparency, salary, Gen Z and millennials are actually pretty good from what I've seen. So it says something around 74 to 75% of millennials and Gen Z are more openly talking about salary and all of these things, compared to something like 40 to 45% of baby boomers. So we're open to talking. The younger generation is more transparent about money, yet it seems all of the ownership is still amongst the baby boomers. So where's the gap there? Like, is it good to be openly talking about money in general? Mm-hmm. What are your thoughts on that?
Yes, I never really understood why you wouldn't be able to talk about money. If I get religion and politics because you might offend somebody with very different views than theirs, okay, maybe we don't want to do that. But with money, who's offended at you becoming more successful? That's a poor societal creation if that's what we're saying. That, hey, we both kind of want this thing, but if you get it before I get it, don't like you. So I never really understood why people don't like money. I think the reason is because by and large, we think that money is a reflection of worth. So that's what we say. If I'm worth more, meaning I have more money, then I'm worth more than somebody else as a human. And that's actually not true. Or even this word of net worth. Words mean things. And so when we say that and then apply it to ourselves, it kind of makes sense. It's like, oh, of course I feel badly when I'm poor, because does that mean I have low worth? So we've sort of through psychology taught ourselves to not talk about it because it might make us feel less than. In my opinion, the people who have a lot of money, they don't really find their value based off worth. They might be really competitive on worth, like, I'm trying, I want to win, I want to get this game. But, if I were to lose everything right now, it'd be very difficult. Like, I would have to go through, like, psychologically a lot of issues there. And I would have, like, some component of me that was like, was that your fault? Were you a failure? But I wouldn't feel like I was worth less as a human. I would just be beating myself up that I made some poor decisions. And, like, how do I change that? And so I think we should speak about money more often. And I also don't quite understand why it is perceived as so lowbrow. Like, it shouldn't be seen as unsophisticated to talk about money. I think that's gatekeeping. And so, a lot of times when people get a lot of money, what do? They stop talking about how. They go, well, the thing is, I worked hard and I got lucky. You're like, that's not helpful. Like, how did you actually do it so that I can replicate it or at least learn some lessons from it? And because I think actually money is all around, I'm very willing to share more about money because it seems the right thing to do. Now, I could understand not wanting to share individual net worths or how much you make in a year. That could still feels a little maybe invasive. But talking about how you got there seems to me like gatekeeping one way or the other.
Yeah, I think you shared somewhere in an interview where you just stopped sharing your total portfolio size. You just didn't feel like it provided, like, talk about that a little bit. Where was the kind of the hitting point where it's like, there's no benefit of talking about this, and where did that reasoning come from?
Yeah, I think it was right about when we hit the $100 million mark in the portfolio, and it just starts to make other people feel like it's inaccessible, I think. And so my whole mission here, why I'm willing to go online and talk about all this stuff, is because I want people to realize that, I worked a 9 to 5 for like 12, 13 years, really, really hard. 60-hour weeks, sometimes 70 when I was in finance. And I was a wuss and I couldn't leave forever. And I wasn't really that comfortable taking risk. And so anybody that is stuck in that, like, I feel you, I was there. And anybody who is stuck in the startup that isn't quite working, they're not making enough money, maybe they're embarrassed about that, they can't quite figure it out, I was there. I had multiple startups that didn't work. And so that's what I want to remind people is, like, I'm right there with you. I've been there. And also, I've layered on a few things that have let me get to a place of more abundance. But I think, at some point it starts to become a pissing contest. And so, once I saw there was a lot more people online, starting to share assets under management, which is how I thought about it from being in finance. That was very normal in finance. So you would be like, hey, we run a $100 million fund. We run a $1 billion asset management company. And it sort of doesn't have the feeling it does online. And then I started seeing a lot of people pop up with that. And I was like, I think that's like just a little bit showing off at some point and not actually helping the next level of the person. So we stopped. And then the other part is sometimes your portfolio, you sell one. So then what happens? You go from 100 million to 75 or 75 to 50. And so I just felt like it wasn't very, it was a little disingenuous too. What if the numbers change or what if they jump up hugely? Right. So I stopped. But I think on a go-forward basis, the real message here is that you don't have to leave a 9-to-5 you love in order to get ownership. You can get it inside of that business, or you can get it alongside that business by doing deals on the side. You don't have to stop your startup that you're doing, that you do because you love it and it's the only thing you've ever really wanted to do. You just don't have to have all the pressure on that being the only way to make money. And simultaneously, if you want to leave your job and you want to build a business, it's possible to buy it profitably first. And then finally, if you are already successful and you want to add business, if you want to grow your customers, if you want to diversify your customers, if you want to diversify the products that you sell, you can do acquisitions internal to your portfolio. And I'd like to see more of us buy small businesses than private equity buy small businesses. So that's sort of the mission. And I do think you can do it almost any level that you're at. You just don't go as big to start out.
Yeah. Let's walk through that. So you talk about in the book initially, just you have all of these amazing stats. I'm gonna kind of put this out there, which is one of the greatest wealth transfers that we're about to go into. We talked about baby boomers. They currently own 50% of all the wealth in the United States, and they own 2/3 of the businesses, and 83% are expected to change hands over the next 5 to 10 years. Walk me through why this is such a unique opportunity for people, and talk about your first business deal, like the first one you did. I think it was a laundromat.
Yeah. Yeah. Well, right now we are sitting on what we call the Great Retirement, which is you're seeing the silver tsunami, the baby boomers. They are moving on. They're in their late 50s, early 60s, and they've run businesses for 10 plus years, and they have nowhere left to go. The problem is they can't just shut down the business and retire or walk away, because 90% of their net worth on average is tied up in the business. So any small business owner knows, if you're like, I do $10 million in revenue, it doesn't mean that you have $10 million, right? That means you probably have much less than that, because you are funding that thing as you go. You really get a lot of the cash when you cash out of a business. And so these baby boomers kind of can't leave. They're a little trapped, and they don't know how to sell. Most of them. Often they don't even think that they have a business that is worth selling, or think about selling their business as a sellable asset. And so they're in this perpetual employment, basically, without understanding that there's an exit ramp. And what's fascinating is, we think there are tens of millions of these businesses that will come online over this next 10-year period. But there's a real problem. We talk about that there's somewhere around, let's call it's very hard to get these numbers right, so we'll be very wide on ranges. People say there's somewhere between $10 and $68 trillion worth of wealth that will transfer over this next 10 to 20 year period.
Globally.
10 in the US, 68 globally. But of that 10, we think of that maybe as cash, like that might come in houses or cars or bank accounts. My supposition, my belief is that a lot of that is in businesses. That we're talking about a big chunk of that, let's call it even the $10 trillion, is in small businesses. So we will either see those assets eviscerated and not worth anything, or we will learn how to take them over in some way, shape, or form. And so that is happening all around us. I think it's the biggest wealth transfer in our lifetimes. And we're actually finally the recipients. Young people could finally be the recipients of some of the wealth, because to be frank, for millennials up to, Gen Z now, it's hard. Like if you're listening and you are that age range, on average, you're, for the first time ever, 30-year-olds are making less than their parents. So you pretty much going all the way back through the history of the US, at 30, you are always typically making more on average than your parents in this country. That's not true right now. Houses are 2 to 4x more expensive than they were for your parents on average. You also have wage stagnation. So we basically have had no upkeep to wages, even though our productivity has increased, largely due to technology, but still productivity increases. And then we have inflation eating away at our buying power. So it's real when it feels like things are more expensive. A girlfriend of mine was looking for a couch yesterday. And she's like, I went to the outlets because, I wanted to be reasonable. She's like, and I went into the restoration hardware outlet for a couch, and one was $30,000. I was like, a $30,000 couch? That's madness. That's madness. So, there's this inflation that I think has really, really happened. And it's very present in just our food, for instance. And so we've kind of gotten the short end of the stick in a few ways. But I think that with what's coming, we can actually pair two generations that sort of don't like each other, which is baby boomers and millennial Gen Z. It's very okay boomer, and to them, and from them to us, it's stop quitting. Why are you guys whining so much? You should just work harder, right? We've got this friction between the generations. And my idea is, what if we could bring them together instead? And what if one generation's pain point, needing to retire, not having a real path, could be another generation's opportunity to take the mantle? And that's what I'm pushing for.
So if I'm a listener and I'm in my 30s or 40s and I have a job, or maybe I have some way to earn income already, I'm probably thinking, what is it about buying a business that's so interesting when I don't know anything about running a laundromat?
Yeah.
Why can't I just invest it into the S&P where I have historical returns of showing stable returns, or buying, real estate like my parents did? How do you walk people through that? Why is it such a good opportunity to buy a business when there's other opportunities?
Yeah. Well, one, let's compare real estate and buying a business. I think real estate's pretty incredible from a taxation standpoint, so it can help you offset taxes. But right now, the average home price in the U.S. is $400,000. You make, if you use a traditional mortgage on that piece of real estate, about $150 to $200 a month in profit, net income, let's say.
After taxes, all the fees.
Exactly.
Repair,
This is if you're renting it out to somebody else. And so the problem is $150 to $200 for a $400,000 liability is not great. That's not going to make you rich. Now, what it might do is help offset taxes. It's more stable. You could theoretically pile a lot of these on. You could try to do creative financing with it, but that's still a lot of risk for not a very high income. You better have a lot of doors, like they say in real estate. Second is, let's compare it to the stock market, for instance. So the stock market, you could say, could return you 10% every year, but you need a big amount of cash to put into the stock market to get anything out of it. I'm not a big proponent of margin, but it's not like they give you margin on nothing. So if you want to make enough money to supplant your income, let's say, or even be meaningful, you better have hundreds of thousands of dollars already in the stock market, if not millions, because that 10% is going to only be as much as you have able to invest. So you have no ability to gain leverage in stocks. You have ability to gain leverage, but not a lot of income in real estate without risk. And my point is, do both of those things, but add something that's very income driving. And so I think about everything like a portfolio manager would, because I come from finance, which is, what's your asset allocation in your life? And this is it sounds like a very boring word, but with a business, you could go and buy a small business just like you would a house. So 10% down plus a loan. The difference is it doesn't have to be on your income. The loan can be on the business's income.
Right.
And then that business typically can, you buy profitable businesses. That's what I like to do. I don't really buy turnarounds. That's a different strategy. But you buy a business that's cash flowing. The average small business makes somewhere between 10 and 30% margins on a small business. So, if you have a business that's doing $100,000 a year in revenue, you're making $10,000 to $30,000 a year in profit. You could never do that in real estate. You couldn't even touch that with the same amount. Now, this business, will it be more work? Certainly than the stock market. You kind of just put it in the stock market and sit there. Will it be more work than real estate? Maybe, depending on how you run real estate. And is there more risk in a small business? Sure. But I sort of think about it like equity and bonds. You want a bond in your portfolio to get a little bit of income, but you want equity for upside.
Yeah.
And if all you have is bonds, you're not going to beat inflation over time. And so that's why I think buying businesses is really interesting, because from a risk-adjusted perspective, if you're able to buy a profitable business and understand how to run it and grow it, your upside is just much higher than the stock market and real estate.
Yeah, great point.